Well, broadly, the narrative last week was around US-China trade hopes, with softer than expected US inflation boosting bets for a rare cut at the Federal Reserve meeting this week and potential trade ties from President Trump's visit to Asia that triggered a cross-asset rally. Now, this comes as despite bets of easing broader trade tensions, geopolitical posturing by the West featured as the top driver of assets last week. Oil was the biggest gainer after the US sanctioned top Russian oil giants. Benchmark Brent crude surged as much as 7.5% to above $66.5 per barrel after languishing near $60 per barrel for much of October. The fall in precious metals from record highs was another big theme last week, with gold pulling back sharply, down 3% to below $4,140 an ounce, while cryptos have still to recover from the flash crash on 10th of October. Bitcoin regained its composure to rise 3.4% to above $100,000. And turning to Asia-Pacific stock markets, it was a wave of green from China to Australia. Stocks surged on hopes of trade deals during Trump's first visit to the region. The confirmation of a high-stakes meet between Trump and his Chinese counterpart Xi Jinping boosted Asian stocks. Japanese stocks were the biggest gainers, hitting record highs after pro-business new Prime Minister Takaichi Sanai was elected, with Indian stocks that were also boosted by solid festive sales data, with both benchmarks closing in on their all-time highs. The Aussie index gained 0.7% after signing an $8.5 billion critical minerals deal with the US, which boosted rare earth stocks and investor sentiment alike. In the US, Wall Street stocks ended the week at a record high, extending a bull market that's already added $30 trillion to its value since April lows. Easing trade tensions between the world's two largest economies is giving investors a fresh boost, but this week will be the bull market's make or break, with big tech firms that are scheduled to report earnings. The Canadian stock index closed the week in the green despite the Trump-Canada fallout due to the anti-tariff ad. Brazilian's benchmark rallied on hopes of a trade deal with the US. Across the Atlantic, benchmarks in the region gained. The UK's FTSE, which is the FTSE, led the charge with over 3% gains. The German DAX and the French CAC also closed out the week in the green. However, the South African stock index fell marginally on high debt worries. Having looked at the market moves, let's now turn to the overall economic outlook as well. In Asia, India still remains on the bright spot, with China's economy that continues to show a loss of momentum. Beijing faces deflation risks, a recession in its real estate and consumer demand, while the fourth plenum showed Beijing's focus to overcome those issues. No concrete steps have been detailed. The ongoing trade discussion continues to weigh on Japan and Australia, with the outlook for most of the other regional countries in the negative. A slowdown in global trade from US protectionism is also likely to offset any green shoots from domestic policies in Asia. In the US, the second long government shutdown is also now starting to hurt the economic activity. Weakening business activity and cooling job market will likely push the Fed to cut rates again this month. And in December, the outlook for Canada, Brazil, Argentina is also negative because of Trump's trade rhetoric. In Europe, the situation looks much worse, from deepening troubles in controlling budgets. France is not likely to meet its budget target, with politics that is compelling economic disasters as well. UK continues to struggle as well to fill a budget black hole, and Germany is losing its shine as a growth engine. However, easing trade tensions could boost the region's outlook. Trump and Xi's meeting this week will likely shape the next phase of global economic outlook.